Buying a home involves several costs beyond just the purchase price of the property. Many homebuyers are not aware of some of these costs, so in this video, I'll explain each one so you can be aware, budget accordingly, and have a smooth transition into home ownership. Working with a real estate agent and a financial advisor can also be helpful in navigating the complexities of home buying costs. These costs usually are around 2 to 4% of the home's purchase price. Hi, I'm Fana, a real estate agent and investor in Nevada, servicing both Henderson and Las Vegas. Subscribe to my channel for all things real estate and lifestyle. I love showing you what Las Vegas has to offer with home and neighborhood tours. The down payment is the most substantial upfront cost, expressed as a percentage of the home's purchase price. The amount required usually varies between 5 to 20%. If the home you are purchasing is for an investment, 20% is often required. You can pay as low as 3.5% with an FHA loan or even 0% with a veteran's loan. You can talk to your lender to find out about federal programs that could provide a grant or financing for your down payment. The amount that you do not put towards down payment is funded by the lender at closing. The earnest money deposit, which is about 1 to 2% of the purchase price, proves your intent and commitment to purchasing the home. It is paid after your offer is accepted and at the open of escrow, and will be used towards the down payment. In a competitive buyer's market, your real estate agent may advise you to put a higher earnest money deposit to show the sellers that you are serious and stand out among other offers. When you work with a lender to get a mortgage, there are fees for setting it up, such as the origination fee, processing fee, and underwriting fee. These fees can vary depending on the lender and the type of loan and will cost about 1 to 2% of the loan amount. The mortgage lender will also require an appraisal to be performed. A certified appraiser will do a comparative market analysis, take a tour of the home, and prepare a comprehensive report stating how much the property is worth. The lender will use the value to underwrite the mortgage terms and verify that the amount the bank is lending is not too much. The average cost of an appraisal in Nevada is about $600. A buyer normally has a 7 to 10-day contingency period to have the property inspected by a professional to see if there are any hidden problems that need to be repaired or negotiated into the contract. A typical inspection fee for a single-family residence in Nevada will be $300 to $400, but can go up to over $1,000 for larger properties. In Nevada, escrow fees are usually split 50-50 between the buyer and the seller, although this is negotiable. The charge includes the cost of an escrow officer to manage paperwork, prepare a title report, and clear the house for sale, making sure there are no discrepancies in title or existing liens on the property. They will hold and transfer funds during a real estate transaction from contract to close and prepare a settlement document at closing stating all the final costs incurred to both the buyer and the seller that your real estate agent and escrow officer should go through with you. The typical escrow fee in Nevada is about 1% of the purchase price. Title insurance is a one-time premium that is handled at closing. There are two types of title insurance, the lender's policy and the owner's policy. While the buyer usually pays for the lender policy, the seller will often pay for the owner's policy, which protects the lender and the purchaser from title disputes and unknown claims against the property. Title policies usually cost about 0.5 to 1% of the home's purchase price, and the coverage amount will be equal to the purchase price of the home. The lender's policy will remain in effect until the mortgage is paid and in full, and the owner's policy lasts for as long as you own the home. You may need to pay upfront property taxes at the time of closing your home, depending on when the tax year starts in your area. The amount will vary based on the specific location, the assessed value of the property, and local tax rates. The property tax rate in Las Vegas is one of the lowest tax rates in the nation. This would be considered one of the prepaid expenses as itemized on your closing documents. Lenders often require you to have homeowner's insurance to protect your investment, which can add up to your upfront costs. The cost of insurance varies based on factors like the home's location and coverage level. The lender may require the first term of your homeowner's insurance to be paid at closing, which is another prepaid expense. Most lenders will collect 10 to 20% of the annual home insurance premium at closing and deposit the funds in your escrow account. The average cost of homeowner's insurance in Nevada is $1,191 per year or $99 a month, which is 41% lower than the national average. The last prepaid expense is prepaid interest. This includes the interest on the loan due before the first scheduled mortgage payment. It includes the daily interest that accrues on the mortgage from the closing date to the first payment. If your real estate agent has you sign a buyer brokerage agreement, you may owe your agent broker commission funds at closing to make up for the difference from the seller's agent if the percentage is less than what is stated in the buyer broker agreement. For example, if you sign an agreement with your agent that they will receive 3% of the commission of the sales price and the seller's agent is only giving 2.5%, you as the buyer would be responsible for the other 0.5% to your agent at closing. Although not all agents have their clients sign a buyer broker agreement, there are laws coming into effect in 2025 in Nevada that will require buyer's agents to have a buyer broker agreement signed by their clients, just as it is required for listing agents. The broker for who your real estate agent associates will likely charge a transaction fee that will be debited to the buyer at closing. The transaction fee is usually between $400 to $700. Remember to budget for the costs associated with moving your belongings to your new home, such as hiring movers, renting a truck, or purchasing packing supplies. Although a more trivial cost, don't forget about setting up utilities like water, gas, internet, and electricity. They might ask for a deposit for new service. At this time in the Las Vegas housing market, interest rates are higher than what buyers would like them to be. So an interest rate buy down or buying down points is a trending tactic that buyers can use to bring down the interest rate either temporarily or for the full term of the loan. The cost of a buy down varies depending on the sales price and the type of buy down, but it would show as an upfront cost at closing. Many times the buyer can negotiate the seller to contribute this cost, especially in new construction where the builders give these incentives in order to sell their standing inventory. There may be some non-cosmetic repairs needed that weren't negotiated into the purchase contract that you will need to complete before moving into the home. And depending on the house, you might want to budget for renovations or upgrades. If you are purchasing an older home, maybe you want to put a fresh coat of paint, upgrade the kitchen, bathrooms, or maybe the flooring. It's always easier to take care of these major renovations before moving in. If you are buying a new build home, you may have a list of customizable options that you would like and would want to make sure that you include those costs into your budget. If you purchase a property in an HOA community, you may need to pay initiation fees and monthly dues at closing. HOA fees are usually prorated based on the number of days that each party owns the property in the month of closing. For example, if the closing date is August 15th and the HOA fee is $300 a month, the seller would pay $150 and the buyer would pay $150 at closing. I'll finish with a new construction tip since many of you are interested in the new build inventory here in Las Vegas. There are great deals to be made in new construction. However, be aware that some of the closing costs that the seller would normally pay in a resale home, the builder in a new construction transaction may not contribute. Some of these costs are real property transfer tax, HOA transfer fees, and owner's title insurance. If you have any questions about what you are being charged for in a real estate transaction, don't hesitate to ask your agent, lender, or escrow officer. Thank you so much for watching, and please like and subscribe to learn more about real estate and lifestyle in Las Vegas. If you are considering relocating to Las Vegas or Henderson, please connect with me. I'm here to help you make a stress-free transition to Las Vegas. You can find my contact information in the description below. And I look forward to seeing you on the next video.